Bloomberg Audio Studios. Podcasts, radio, news.
Joining us now after that incredible pricing, expert on short-term and really expert on what PIMCO is thinking. Anthony Crescenzi joins us, just definitive.
Tom and Paul.
Just thrilled to have you here. What is the weekend like at PIMCO? What are you, in a sum statement, saying in Newport Beach in New York about this moment?
Lots of email traffic, lots of back and forth, lots of two-way opinions. I tried to weigh in with the optimistic opinion. PIMCO delivered a cyclical outlook, a one-year outlook a few weeks ago called Uncertainty is Certain. I tried to rename it. I wanted to say that there's more certainties in some areas. There's a lot of uncertainty regarding trade, that's for sure. But isn't there for a business more certainty about the trajectory on regulations and also for taxation? Those are things that matter. So if you look at the small business survey for the last month called the NFIB, you see their uncertainty index plunged because they're confident about some things that matter to them. So we have to take a broader perspective. One quick note, Tom and Paul, on this, like on regulations, for example. When Donald Trump took office in 2016, the Federal Register, a book of all rules and regulations of the U.S. government, was 96,000 pages. The first year plunged to 60,000. The estimate for 2024 is that it rose back over 100,000 pages. You can imagine that'll be trimmed massively. What does it mean? It means there could be disinflationary forces along with the inflationary forces that we're hearing a lot about, especially over the weekend. Regarding tariffs. So think holistically, think about the entirety of the policies of the administration.
I mean, brilliant. Paul, I'm fascinated to see what President Trump's polling is. You know, how's he doing kind of thing in the coming weeks.
So, Tony, that sounds like a scenario where perhaps in your world of fixed income, maybe you take some credit risk here. How do you guys think about that versus me just clipping my 4.25 two-year Treasury coupon?
This is the bond market is a target-rich environment. There's much to do. There are yields between 5% and 7% for high-quality fixed income. By high quality, we mean what the rating agencies say are A-rated, BBB-rated, and above. A BBB-rated bond will have, for example, it's considered investment grade, a 0.13% default history per year. So you get 99.9% chance of getting your money back. So many different securities around the world, you can get yields between 5 and 7. And the starting yield on the U.S. Bloomberg aggregate explains for 94% correlation the return over a 5-year period. So whatever that number is, 5 and 7% today, that's going to be your return the next 5 years. So one final word on credit. It doesn't have to be corporate bonds. There's so much to do. As I said, it's target rich. Weeks ago, Mexico, Saudi Arabia issued bonds in U.S. dollars. Mexico, BBB rated to us and rating agencies, had a yield of 250 over treasuries, 2 net points more than U.S. treasuries. And so if you think, and it's dollar denominated, so you don't have to worry about the currency. If you think that the government of Mexico will pay you back, that's not a bad choice to make over BBB corporates, which are 100 basis points more than treasury. So lots to do. Target-rich bonds are very attractive relative to history, expected inflation, and expected volatility. Very excited about the run-up in yield as well. This is a second bite at the apple, what we've seen in recent weeks. I was afraid that yields had fallen too fast. So, I mean, as Tom likes to talk about, I mean, this is, in your world now, you can just play for the yield. You don't have to be, like, really smart on price appreciation, but... The real exciting thing, Tom and Paul, is looking at forward short-term interest rates. The bond market is priced for the Fed to lower its policy rate to 4%. And then leave it there the rest of the decade. If you believe that the defensive properties of bonds have returned, meaning that bonds will rise when stock prices fall, then you're getting the defensive properties of fixed income for free the rest of the decade, in the sense that if something bad, anything bad happens that drives yields lower, you'll get a great benefit, a total return. So it's really total return time in the fixed income market. Think about the yield plus the potential for a drop in yield from here and then rise in price. It could go the other way. We could talk about that, but we don't think so.
The summation is, and I don't have it in front of me, but basically the last 10 years on a total return in bonds have been bloody. I mean, PIMCO was built on the great moderation and, you know, adding alpha to that. I mean, Bill Gross is off in Mexico buying Mexican stuff to do a carry trade, but the bottom, I don't know what Muhammad was doing.
Great article by Bill,
by
by the way, last week in the Financial Times. On
Did you see that? What did you think of that?
I loved it. And what I love most is, and I said this on a stage in Miami last week, I said, you know, there's something more about to asset management than looking at the returns and gathering assets and such. It affects people's millions of lives. I was in a place, it's a Catholic place, and I reminded me of going to Boys Town in Nebraska.
Yes.
And I saw a picture of Father Flanagan, famous from a movie from 1938 with Spencer Tracy. It reminded me of the importance of the work we do, because the work we do affects the work that other people do, whether it's a pension manager or building a company or a hospital.
I went out there years ago. Mohammed and Bill were on good behavior, speaking terms. And the best thing in this article in the FT on William Gross was the photograph. What a mess. And I'm looking there, and over his right shoulder, his Monroe Traders there. Explain to our audience, Tony Crescenzi, how cool it is that Bill Gross had 6 Bloombergs and a Monroe Trader on his desk.
And like a Tonight Show host or any of the Late Show hosts, it seemed his area was elevated above others to give that sense of power. I was looking in that photo to see if I was in it, because I know I was sitting behind him in that photo somewhere, and it's a little blurry, so I'm not sure it was me.
So where's real quickly, Tony, the best opportunity here that you see that you guys are talking about these days?
Simply do not need to reach, if we went in by asset sectors in the bond market, the most liquid expression of credit would be agency mortgage-backed securities yielding 140 over treasuries. But as I said, it's a time you can Fabozzi the heck out of the bond market now, meaning take the big 1,500-page book, find lots of things to do. It's a really great time to be a fixed income active manager.
Yeah. I mean, for a while, nobody wanted to talk to you at the cocktail parties because you had no interest rates. You had no carry.
And lots of uncertainty. Just stay invested. All the history is on the equity market, the bond market. Stay invested. You missed the few best days, and you missed a giant portion of the return over time.
Don't be a stranger. I'll talk Staten Island next time. Tony Crescenzi,
Thanks so much for having me.
So much with the Pacific Investment Management company there.